So good morning. Please don't fall asleep on me. I know it's 9 o'clock. So today I have the pleasure to introduce to you guys three people that we're going to be talking about blockchains, trends, where we now, and where we're going to be. So to my right, we have Yanis, and then next to him we have Tom, and then next to him we have Fletcher. So I'll let you guys introduce yourself.
Okay, hi, good morning, everyone. My name is Yanis Kalfoglu. I'm coming from London, the UK. Had a bit of a short trip yesterday. Come over here. My background in blockchain stretches back to 2012, 2013. I've been around in this space from the corporate enterprise kind of angle of it. I was working for a large US asset manager looking into blockchain proof of concept initially and then proof of value applications. Also lately I've been involved in some other projects with blockchain technology.
Hi, I'm Tom Plunkett. I'm with Oracle. I'm a consulting solutions director there, where I focus on blockchain applications. Previously, I've been an expert in different emerging technologies, whether we're talking big data or cloud computing, going back to the 90s with Java and the web. But the focus of my career has always been, how do you take an emerging technology and bring it into an enterprise application? And so that's what I'll be talking about during our presentation is, how do you go from a proof of concept to real life?
And I'm Fletcher. I'm with Cognizant. So Cognizant's a Fortune 195 professional services firm. I'm part of our blockchain and distributed ledger practice, which is global, but I'm actually based here in Washington, D.C. I lead all of our partnerships with startups, consortia, trade associations, as well as working directly with clients. And I oversee most of our growth and go-to-market, translating our capabilities from the banking and financial services industry into other emerging industries, so healthcare, retail, media and entertainment, et cetera.
Thank you so much. And a little bit about myself. So I founded a company called Conventional Ventures. I have a business partner out west. We look at fintech emerging trends and innovation and how do we apply it for enterprises, what it means, and how do we do something different? How do we leverage the technology to do something better? We also do a lot of advising for startups. We match up the founders with the funders. So let's get started. One of the interesting things we're always talking about is, blockchain spending is huge, right? So recently, IDC say that the spending is predicted to hit about $12 billion by 2020, compared to 2018, they're thinking about 1.5 billion. So that's huge. For each of you guys' perspective, where do you see some of the more promising use cases in the enterprise blockchain applications? Let's start with you, Yanis.
Okay, thank you. So yeah, I mean, this is predictions 2018. So I think definitely the spending is going up because now there was a bit of a fatigue with the POC, proof of concept, for at least a couple of years in large corporates. But now things are starting to get a little bit more clearer where the value can be extracted. And in my view, I was kind of lack of a curveball and a bit of an outlier. I think the big spending and the value is not going to come necessarily from the financial services, where there was a lot of attention a few years back, but mostly from other industries, especially supply chain and logistics. And that is actually a very multifaceted applications there. You're looking from identity all the way to tracking down a parcel or a specific product. The thing is that this industry is extremely big. It's valued in trillions of dollars, depending how you define supply chain. And blockchain technology in particular has some very good intricate properties that you can actually use to make supply chain as automatic as possible, which is a cost saving and also an opportunity for revenue generation.
What do you think?
So I'm going to say me too on all three of those, but I'd like to focus it a little bit on, I see three different trends as to what's going on in the blockchain and cryptocurrency space. I see one trend line which is just focused on cryptocurrencies like Bitcoin and Ethereum and 1,000 different altcoins. And I include the exchanges and how you trade those currencies in that trend line. The second trend line I see is focused on ICOs, initial coin offerings. For those of you who aren't familiar with ICOs, they're basically the next version of crowdfunding and venture capital funding, and so for startups. So I see ICOs as a whole separate phenomena, even though obviously it overlaps quite a bit with cryptocurrencies and trading. And then the third trend line I see is what we call enterprise blockchain, which, getting to Yanis's comments, is really where I think supply chain is probably going to be the first application that comes out of enterprise blockchain, besides the financial and trading stuff from the cryptocurrency and the ICO related issues.
I actually will disagree about the supply chain use case. I think it is one that theoretically fits really well. It's a strong use of the technology, and it fits all of the reasons why you would want to use a blockchain. But it also has a requisite of needing IoT enablement throughout the supply chain to really make sense to use a blockchain. And so I think only in really select instances is that complementary technology, really that investment being made to make a quick or meaningful blockchain supply chain application really meaningful, like in the short term. I think long term it will happen. What I see is really from the use case perspective, there's a lot of excitement and there's a lot of fervor around some of the big transformational aspects of the technology, right? A lot of people, like international trade, right? Being able to track inventory across the supply chain, also the financial letters of credit and different paperwork that's there, right? That's a big, big system, right? We talk about capital markets, potentially blockchain, being able to facilitate faster and seamless settlements, right? But those are big infrastructural shifts that take a long time to not only mature with the technology, but also to get adoption and consolidation around. So I actually see the use cases in the next 5 years that are really going to be getting traction are a little bit smaller. So the feedback I get from clients is, I don't want to invest in something risky that's going to replace core infrastructure. I want to think about new opportunities for revenue, new products that I can launch using blockchain, or new ways I can think about a market where the risk is a little bit less. So a good for instance for that is we just launched a live application in Singapore with an insurance company. In Singapore, gestational diabetes is actually very high. The rate of it is outsized for their population, and it's not something that's traditionally covered under insurance. So what we were able to do is combine a reinsurer, an insurer, and a healthcare vendor, electronic medical record vendor, and create a parametric health insurance product, right, that they could offer via an app, right? So it's a new market, right? So there's revenue potential, which means it gets green-lighted a lot faster, right? You're not replacing core infrastructure, so the cybersecurity requirements and the testing is a lot less. You can get to market a lot faster, right? And it's a very small kind of product, right? Where basically all you need is a diagnosis code from a hospital that says, yes, gestational diabetes is there, right? And you can make a payout, right? So it's a great use of a smart contract. It's not very complex, right? Because complex smart contracts are still not very useful, right? We haven't been able to figure out all the nuances of it. So those are the use cases that I see actually picking up more steam, right, in the next 5 years, as opposed to some of the big transformational ones where we'll see the really significant value taking more around the 10-year time frame.
Just to add a little bit to your comments on supply chain specifically, that's actually what I focus on for Oracle. Is I focus on supply chain, and there's a couple reasons for that. One is that Oracle historically, besides being a database company, also has a big focus on enterprise ERP systems and supply chain systems. And so I've been looking at how do we do this for some of our largest customers, and his comments are very point on that to do the most transformational use of blockchain with supply chains, you probably do want to use IoT to track the products as they move through the supply chain from the producer along all the hops until they hit the destination. But one of the other value propositions of supply chain and blockchain is the idea that we're going to use blockchain to have a transparent single source of truth for the information that's taking place in the supply chain. So that not only can you get immediate access to the information, but your suppliers and your producers can see where the products are on the blockchain. And you don't necessarily need to use IoT for that. Just think of shipping today. We use barcodes and other technologies to track where the products are in shipping. And so you can marry blockchain to your supply chain and just use it for transparency to allow your suppliers to see where the products are, and have confidence that they have a single source of truth, which today they don't have a single source of truth.
So, and just to keep the discussion going, I'd also say, I mean, I definitely agree with that. I think a part of a little bit of my skepticism on the use case is there are only a really few select market players who can actually really do anything in this space meaningfully. I mean, I've talked to some pretty large retail clients that you would think would be very large brand names, probably wearing some of their clothing right now, and they don't have the influence to get their suppliers on board to this, right? So it's going to require, and I think this is true for many of the bigger use cases of blockchain that are out there, there's really only a handful of market players that can really move the market. And I think either you're going to see those individuals move and it start to shift, or you're going to see new startups come and try to disrupt that. But I think that's another kind of barrier that I mean, there's two, like for retail, for example, right? There's two main retailers out there that are pretty obvious to everybody that if they adopted it, everybody in the supply chain would probably have to get on board, and that would start the network effects. Otherwise, I think we have to wait for more public blockchains to mature, such that you're not joining a specific permission blockchain, but that you're able to join kind of a more public web like we would with the internet.
Just to add a few comments to what he just mentioned. So for those of you who aren't familiar with the phrase permission blockchain, that refers to a private blockchain where you control who joins, as opposed to a public blockchain would be something like Bitcoin or Ethereum, where anyone can use the currency immediately. So typically, if you think about a supply chain environment, that would be a case where you have different parties who do business together all the time, and so that's an example of a good use case for a permission blockchain, because you know who those parties are. And then if a new supplier wants to join, you just say, okay, you're now a new supplier, but you know who they are when they join the blockchain. And because you know who the parties are, that changes some of the consensus and performance requirements that blockchain has. Because you can change the consensus algorithm. The original Bitcoin algorithm, proof of work, takes a lot of work to actually perform. And if you go to a consensus algorithm that doesn't require proof of work, you can make your blockchain perform much faster.
Yeah, what I would like to say, I mean, I kind of started off this discussion with the supply chain. My comment was not so much on the nitty-gritty details of the existing supply chains as we understand them now, but what blockchain technology, especially distributed ledger technology, or whatever you want to call it, there's different acronyms out there, it allows you to actually abstract a little bit beyond that, not necessarily looking at what is the existing world of supply chains and then adding blockchain on top of it, but using that technology to be able to capture the entire supply chain information in different settings. So for example, in the aviation industry, there was a very interesting experience with one of the biggest airlines lately that they did the flight chain, and there, to a certain extent, although it was provision information from one point to the other, it's actually a supply chain of information. And what they did, they used the blockchain technology and the ledger in the background as a single source of truth, so that the information that will be displayed on the arrival boards or at the controller, at the tower, or at the aircraft can be exactly the same. So as a metaphorically speaking, that's actually a supply chain of information. So I'm not necessarily talking about the supply chains of huge containers going through the ocean. I'm talking about supply chain of everything, from farm to fork to any other travel information from one point to the other, using blockchain technology to make it more efficient, provide opportunities for revenue generation. And yes, I do concur with the comments from Fletcher that it is a little bit a game for the big players to a certain extent, but at the same time, let's not forget, this technology is very easily accessible. Basically, there's very low barrier to using blockchain technology in terms of proprietary and licensing. So the kind of the crowdsourcing effect is there to take on.
You look like you had something you want to add, Tom. No, you good? Okay. All right. No, this is good discussion. I think recently BBVA CEO, he made a similar comment, to some of the concerns you guys were talking about too. Is it mature right now, right? Do we still have a lot of issues that we still need to overcome? Potential is there. So let's switch gear a little bit, because looking through the agenda for the rest of the day, we talked quite a bit about enterprise blockchain. The next session is going to be around ICO. So let's talk ICO for a minute. So, from a currency capital market perspective, right, which is still fairly new, if you will, the volume for the last quarter is quite large. It's $7.2 billion funds being raised through ICO. The biggest recent raise was from Telegram, $1.7 billion that they raised from 2 crypto markets sales in March. So in terms of from the intersection of crypto and incumbents' perspective, do you think the crypto will push incumbents to make the more traditional financial systems fairer, more stable? Are they going to outflank them and dominate them? Where does that stand? And I know, Fletcher, you and I talked a little bit earlier in that perspective. What do you think?
Yeah, so it's interesting. If I look back 18 months ago, and if I walked into an executive room and started talking about Bitcoin or cryptocurrencies, right, somebody would smile and nod and then quickly tell you that their meeting, next meeting is coming up and ushering you out of their office. And that's changed completely. I think the run-up that we saw built some excitement around it. But in terms of traditional enterprises adopting cryptocurrencies, security tokens, right? There's the regulatory uncertainty that those companies, the ICO platforms are facing, exist also for the enterprise. And so they're very hesitant to really adopt that. But so where we see the actual movement coming is asset tokens. So being able to take a tangible, non-native asset to the blockchain, tokenize it, right, and then make it more liquid, right? And traditional enterprise, that's very simple, right, for inventory to track it. But we're talking about more from a financial standpoint, right? If you can tokenize a piece of artwork, or real property, or portions of real property, or whatever other asset it is, like your boat, maybe it's a wealthy person, right? Financial institutions are really interested in that because now it's more liquid and they can take that as part of their assets under management, potentially, and be able to trade it, right? So that's any financial advisor that you might have, right? If they can increase their AUM, right, they're gonna run at that opportunity. So we're starting to see those questions, and we see that as the stepping stone for traditional enterprise to get towards that more cryptocurrency, which lacks custodianship services, hedging services, and the regulatory uncertainty.
So I would say that the ICO market today reminds me of the dot-coms in the late 90s. This is definitely a bubble, but it's also going to be very, very hot and very big for the next until it bursts. And there's a couple reasons for that. One is that we, as Fletcher mentioned, we've got some regulatory guidance, but it's very minimal. Congress has not acted at all in the cryptocurrency space. Congress is slowly beginning to learn about it, mostly if someone sends a congressman a contribution in Bitcoins or another currency. They say, oh, well, how do we spend this? What is this? Now, not all congressmen accept donations in cryptocurrency yet. And some of them are obviously accept contributions from the traditional finance institutions, and so they might be hesitant to accept currency from a potential competitor. But I do think that if you're someone who's doing a startup, you should definitely consider ICO funding as a possibility. In fact, I spent a lot of time out in Silicon Valley because that's where Oracle's headquartered, and almost every startup I meet is plans to do an ICO.
Yeah, I would say the ICO market, as you put it, it's more of a broader picture of the tokenization. And I think tokenization of our economy and digital economy, which is nowadays is definitely happening. And ICO is, on one hand, is a way of raising funds for a venture, which goes back to what you just mentioned, the crowdsourcing of the old days. But at the same time, it's actually a level playing field, so everybody can participate, and you can decide on the exact asset you want to participate on. So, actually, in this very room about a year ago, there was a very interesting example, and gentleman said in a panel that imagine you wanted to invest in a particular let's say technology of IBM, you can't. You just have to buy a stock of IBM, which includes all sorts of technologies they do. Whereas with an ICO, with a token, you can go down to the exact details of what you're interested in. With regards to the regulatory thing, let me just say that although there has been a lot of maybe fog around what's going on with regulations, I think especially for a regulatory perspective and ways of working, we have seen unbelievable pace over the past year or so. There's going to be a lot more. I think regulators are doing a great job, not only in this country, but globally. I'm not coming from that kind of background. I became kind of an expert from the FCAs and FSA to MAS to all the regulatory bodies here in the US. There is a lot of work being done. And I think this is great because although it's not exactly clear guidance, there is a lot of encouragement that we need to put the right regulatory frameworks around this to make it work. So definitely it's happening. I think regulators and regulations eventually will help it to grow even further. What will be, again, kind of the curveball of the outlier is that when the existing incumbents and the companies out there will be able to actually start tokenizing their own assets. Because the ICOs for now, I mean, you wouldn't see an ICO of Google, right? It's already done their IPO, but you wouldn't be, looking at predictions 5-10 years time. All these big incumbents, over here, they would have a capacity to take certain products and possibly tokenize them. How they're going to offer them to the market, again, that's something which we can't predict today. But that's the kind of horizon we're looking at. So ICO is not just only, investing in a cool startup which is going to be the next Facebook. It's something which has a much bigger impact, in my view.
I do agree. I think over the last quarter, it consists of 45% of the money raised in IPO. So it's sizable.
It's easier to raise than VC, so that's why.
So last question, and we're going to have to close the panel because I think we have a lot of interesting things to say. You could just say yay or nay. Yesterday, the CFTC said he thinks the US is 4 years behind compared to everyone else. Asia, Europe. Do you agree? Disagree?
Pass.
No.
Ooh.
I think select jurisdictions like UAE, Singapore, and others, Malta, we definitely are behind.
Cool. Thank you so much. Good.
Thank you
so much.
Thanks, everyone. It's a great panel.